Hey everyone!
Hi!
So welcome to our live event tonight. This is Nina Gervasi. I'm with Cary Area Real Estate, brokered by eXp Realty. And I am here with Kendra McCormick.
Yeah, with Atlantic Bay Mortgage Group. Again, here local in the Triangle.
Yeah,
our office is right here in Cary.
Phenomenal. And I also have in the room with me the fabulous Jeff Trower, who I'm going to bring over. So you may be watching this on Jeff's Facebook Live tonight as well. He is our cameraman extraordinaire. He is a realtor, a real estate photographer, a real estate videographer, drone operator, former firefighter, and so much more. And he is who is behind the scenes working our cameras tonight. And
it's going to be fun. It's a pleasure to do this. It's the first run of this. I think it's going to be a great success.
Oh yeah. So this is going to be a series, but we need him because he got us all mic'd up and ready to go. So
ready?
Thanks,
Jeff.
Yeah,
you may also be watching this on Kayla Carter's Facebook Live, or as well Chris Forgione's Facebook Live. So if you're here on their page, welcome. We are so glad that you're here. And we're going to dive in tonight to talk about all things rates related, mortgage related, so that Kendra can help us understand what's happening in the market, help us understand how this can affect buyers, as well as how it affects sellers, how we can win, and all the great things ahead of us. So everybody's scared, but we're going to be here to shed some light on it.
Guide you through the process.
Yes, and that's the whole idea of having a trusted local lender, not just a random person who picks up an 800 number, nothing like that. Having someone who you know you can go to, who can answer your questions, guide you, educate you, and be there with you every step of the way. So that maybe today's not the day to buy the house for you, but she'll be able to help us understand when is the right time and how to do it.
Absolutely.
So, a hot topic.
Interest rates. It's been a roller coaster ride.
Yeah, really.
Everybody knows, and everybody's wondering what's happened. How have rates gone up so quickly? To kind of take us back a little bit, people have to understand during COVID, it was a market that was precedented, but we've never had rates that low. Fortunately, we call those COVID rates.
Yeah.
We might not ever have rates in the 2s and 3s again. We were under very unusual circumstances, likes that we've never seen in the past. So we kind of have to let that go because COVID, although it's not ending, we've got other issues that we're dealing with right now in the country. And the biggest, hottest topic right now is inflation. And the reason why rates are going up so quickly is inflation has gotten out of control in this country. And the only way to curb inflation is for the Fed to step in and raise the rates, which they will be doing many more times this year.
Right.
However, kind of the next question, again, the Fed met about a week ago. And when that was happening, my text messages were blowing up. Everybody was reaching out. Can I lock today? What's going to happen?
I never knew you were so popular.
They're meeting in a few hours. Just so you all know, when the Fed is scheduled to meet, which happens about every 6 weeks, the rates that we have leading up to their meeting, it's already baked in what they are anticipated to do. And it's even said, believe it or not, that they actually put some moles out there in the general public to kind of leak out there what the Fed is expected to do. And rates adjust usually the weeks leading up to the meeting. So it doesn't all happen in a day. Yes, the rates do get a little rocky for a day or two based on news, but typically they calm down pretty quickly after they meet. And the rates usually already have built in what's expected to happen. The only time there might be a real sudden sharp jump in the rates shortly after the Fed meets is if the Fed announces something that was completely unexpected. So for example, At the last meeting,
Yeah.
they increased by 75 basis points. But that was already, there was an 82% bias out there ahead of that meeting
Right.
that was expected to happen. So because it was expected to happen, rates didn't really move a whole lot.
No,
they were a little
didn't.
rocky for like a day and a half, up and down a little bit during the day, but really there was no big jump because they did exactly what was expected to happen. So again, and if you got questions a little more detailed on this, please put them in the comment section and we will answer that. What's predicted the rest of the year? So what will happen is until inflation gets under control, rates are going to continue to go up. And I would say that what they're kind of predicting about inflation is that the inflation numbers might continue to climb a little bit this summer. That's what some of the experts are predicting. And then we should start see inflation coming down towards the fall. However, please keep this in mind, anybody that's looking for a house. When you are buying a house, you are buying a house. You are not buying an interest rate. Keep that in mind. We've had decades in the 1980s, rates were 13, 14, 15%. We are not, with rates kind of right now in the low, very low sixes. It's not the highest it's ever been. It's not the lowest it's ever been. And it's also not going to be where rates are forever. The next thing that will happen, typically after inflation gets under control, usually what follows is a recession. You know, I don't think that's breaking news. I think people are aware out there that a recession could be on the near horizon. Historically speaking, every time there's been a recession in the past decades, interest rates come back down. So again, when I tell you you are buying a house, you are not buying an interest rate, keep in mind you also won't have that interest rate forever. Number one, you might not stay in that house for 30 years.
Right.
I mean, most do not. And secondly, you can refinance your mortgage at any time. So when rates come back down, typically we're expecting in a recession for that to happen. You know, call me. I will refinance your mortgage into a much lower rate. And I've had clients where I've done 4 or 5 refinances for them. You know, when the numbers make sense, you do it. And that's what we do. We run the numbers and, you know, as Nina will tell you, I'm always 100% transparent and honest with my clients.
That's the best
part.
So
if it makes sense, I'm going to tell you. And if it doesn't, I'm going to tell you to hold off too, because financially, regardless of what you're getting in the mail from, you know, these scammers and junk mail, it's not always going to make sense either. And, you know, you need an honest answer on that.
I heard a great quote today on the call that I was on, and it says, you marry the house and you are dating the rate. So in other words, you know, that rate is not there forever. You have the opportunity to refinance. And some of the creative ways that we have to look at rates right now, I have spoken to you about this. Some of you may only be in the house 5, 7, maybe 10 years. So we've discussed the idea of adjustable rate mortgages as an option as a lower rate right now. Take that option if you don't love the 30 or the 15-year conventional rate and consider it for a lower rate mortgage. Yeah, it's an adjustable rate, but then tell everybody how this works so that if you potentially might only be in the house for so many years, or if you're going to be in it longer, what the options are for refinancing.
Yes. So adjustable rate mortgages are also known as ARMs. That's sort of the acronym for an adjustable rate mortgage. An adjustable rate mortgage could be a 3-year ARM, a 5-year ARM, a 7-year ARM, a 10-year ARM. And I would say for almost the past 8, 9, 10 years, they haven't been very common because the 30-year fixed rates have been so low for such a long time now. But what an ARM is, it's a rate that will adjust, and it's usually based off the SOFR index typically. But when it says it's a 7-year ARM, what that means is for the first 7 years that you were in that loan, the rate is fixed and will not change. So it's not until after year 7 that that rate will adjust. If you're in a 5-year ARM, same thing. First 5 years, it's fixed. Then after that, it will adjust based on the index. And again, the chance of most people either staying in a house or staying in a mortgage beyond 5 years is very, very slim, especially in the triangle area, especially. 7-year, you're giving yourself even a couple extra years there. There's even a 10-year ARM. So again, when we do a pre-approval and run the options, and then the next step is you find a house and you're under contract and we can actually look at locking the rate, we're going to compare those options. Because one size does not fit all on any mortgage. No two people are alike, and no two people have the same kind of financial goals. We get a lot of transient people that might only be here for 2 years. So ARMs are a great fit.
Yeah.
But we also get retired folks that have maybe followed their kids here, and they might be buying a house and saying to themselves, we don't really want to move again. Everybody's situation's different. So we have plenty of options, and it's my job to compare those and financially guide you through making the best decision when it comes to all that.
So you brought up 2 points that I want to address because I get these questions quite a bit. The first one, can an investor use an ARM?
Great question. So it would depend on the programs, but yes.
So there are
most of the time,
options.
yes. Yep.
Yeah, and so the other thing that some of the buyers are concerned about, and they call me and they say, Nina, I want to lock my rate today. Get me to a lender. And I say, that's great. It would be great to lock your rate today if you had a house that you were under contract on.
Hold on.
Right?
No, I got breaking news for you.
So what's that?
I got breaking news. So we have a brand new program.
Oh, see, this is why we do this.
At Atlantic Bay, we have a program that is called Lock and Look. You don't even know about it yet because it's so new.
No,
so
I did not.
This timing is
love
perfect.
This. Go on.
So we actually, because interest rates are such a concern, and our company listens and we act when things are out in the marketplace that are of huge concern. Somebody now has the option, once we have them in our system fully approved.
Right.
As Nina knows, we are one of the few lenders that can get your loan through underwriting and 100% fully approved before you've even found a house.
Which will allow you to
close quickly and do high due diligence, just take all the risk away because it's through underwriting. Most banks and lenders don't touch the file in underwriting until it's attached to a purchase contract with a close date. We do things differently.
Very.
But back to that Lock and Look program.
Yeah, I want to hear more.
Yes, so once they're approved, which again, we do, and it takes about 3 business days, not long at all. They have 60 days to find a house.
Okay.
And then an additional 30 days to close on it.
Okay.
So they can lock, it's like a 90-day lock.
Okay.
The only catch is they're putting a small deposit down on this, and they have to identify and close on a property within 90 days.
Okay.
So
they lose the deposit.
Yes. And who this might be the best fit for, we get a lot of people moving here for jobs. They have no choice. They need to get a house. They might have sold their house and they need to find a house. They need a place to live. It's getting a little easier. The market's softening a little bit, which I'm sure you'll speak on a little bit in a few minutes. But that's the catch. They do need to get into a house and find the house, close the house within 90 days of us locking while they shop.
Listen, I cannot wait to get out there. You're going to see reels about this on Instagram. You're going to see my posts about this all over the place because everybody's been asking for it. So clearly Atlantic Bay has listened to the consumers and giving them what they need. And this is so fabulous.
Yeah.
I have so many people who
you didn't know I was going to throw a little curveball at you tonight.
So that's pretty phenomenal.
Yep.
And I think, all right, so Another thing that Kendra said, we've been talking about buyers and all of this. I want sellers to hear well. When you have a buyer that comes in, maybe you have like 3 offers on the table, they're all similar, okay? Whatever the terms, the due diligence deposit, the offer amount, they're all so close. And then you get something like a pre-approval letter, a pre-qualification letter, and a full approval. That's going to make a huge difference in your security as a seller, knowing that your buyer is going to be able to close on this in the time frame that they say, because they've already been through underwriting. And so many of my buyers who have used Kendra as their lender have been able to go in and say, Kendra calls the buyer or the seller and says, hey, I'm working with Nina, I'm working with this buyer, they're fully approved, we can close in 2 weeks.
Yep.
And I've had the other agent call me and say, holy moly, I love Kendra. I'm going to start working with her because I had no idea that we even had this capability. So just tell us, like, I know you've touched on it, but how that works and what a buyer might need to give you in order to get that done and what to expect, because so many buyers are afraid to have their credit pulled. They're so afraid to do these kinds of things. If you are a committed buyer, you need a house. You're not a looky-loo. You're not a maybe. You are a serious buyer. You need to find, if it's not Kendra, fine. You need to find, although I do love my Kendra, you need to find a trusted local lender that you can work with, that you're going to match up with, that's going to be able to guide you through this process. And if they don't have it, you need to find it, because this is critical in staying in a competitive market. So
sure. So I think I'll back up a little bit to explain the difference between being pre-qualified, then being pre-approved, and then what we typically do, which is full underwritten approval. So being pre-qualified, typically, well, we kind of joke. Sometimes we say people, banks and certain online lenders might get a pre-qual letter to anybody that fogs a mirror. But, but honestly, what it really is somebody's pulling their credit and they're looking at their income. They don't always even ask for pay stubs and verify the income, which can be problematic, but that's typically, and they're basically looking based on debts on the credit report, income. They're looking at debt to income ratios, making sure credit scores are high enough to qualify. Problems that come up with that is, again, not all income is verified. They might not be looking at other properties owned. They might not, this is a big thing that's come up many times in this area, especially during COVID when so many people were leaving other states to get to North Carolina. They might not even be asking the questions, are you allowed to work in North Carolina? Is your company, is your company going to sign off on you being a remote employee? So a lot of things aren't even asked during the pre-qualification process.
I
So
have to pause you for 1 second. If you are a buyer and you hear that from a trusted lender and they're asking you these questions and you don't like the answer that you receive, which is, you really shouldn't be doing this, you can't. Don't go looking for other lenders that will give you the yes answer you're looking for. Due diligence in North Carolina is, let's say, for the most part, a non-refundable fee deposit, let's say, because you can get it back at closing. The point is, you're going to put money on the table because you kept searching and you kept searching for somebody who would give you the answer you wanted. And then you might get a week out from closing, maybe 2 if you're lucky, and find out that you're not going to close because you didn't make it all the way through underwriting. And then you don't get that due diligence back. You will be a very sorry and hurting buyer when you lose your $20,000 or more due diligence because you did not heed the advice of a trusted local lender saying, this is not for you right now. So I'm sorry, I had
Yep,
to interject
no
that because
problem.
I get that a lot. And I say to people, look, if I can't trust what Kendra says, I really can't trust what this other lender is telling you, because this is
Yeah.
where I trust.
And the truth is, being honest and upfront and open about all these things up front allows me to come up with other solutions. So I've
Right.
had people that wanted to get to North Carolina, their job would not sign off on them being remote. So we restructured and we did the house as a second home. There are other solutions out there,
Exactly.
like dozens of other solutions, but we want to look at that and talk through those options early on. You do not want this happening 2 days before closing. When there's and meet your closing date and not risk the money you have on the line with your due diligence. So it's a really important point. Always be honest with us, because I'm here to guide you. I'm here to help you. I want to get you in a house. That's my
Yes.
goal. And if it's not today, I'm going to give you solutions to make that happen. Whether it's 3 months, 6 months, a year from now, we'll get you to the goal. But all that up front makes a huge difference. Yep. So that's what a pre-qualification is. The next step is a pre-approval, which is very common, and that is taking it a little further, verifying income, verifying assets. Do they have the money to get into a house? And then typically what a good quality lender will do is also do something called desktop underwriting, where they're running it through Fannie Mae or Freddie Mac to make sure that the loan receives an approval. This is not the same as it going to underwriting, but it's making sure the basis of the loan looks good and there really shouldn't be an issue with it getting approved. That's probably the most common. As a seller, I probably would not accept an offer with just a pre-qualification. I think that's kind of a red flag one that I would probably either dig a little deeper, or if I was the listing agent and I had an offer, maybe I'm asking for the phone number for that lender and I'm calling them up before accepting that offer. I'm sure you've maybe done that in the past.
Yes.
And then lastly, the full underwritten approval is, again, something that we do up front, but most lenders, majority of them, most lenders, banks, credit unions, do this after they have a purchase contract. The loan is sent to underwriting, and the docs that are needed for that are going to be 30 days of pay stubs. If they're self-employed, last 2 years tax returns. Again, if they're a W-2 employee, pay stubs, and then the last 2 years of W-2s. We're going to need a copy of their driver's license. If they are a permanent resident, we're going to need a copy of their visa. And we're going to need 2 months of bank statements. And bank statements, we want to see that from the account they're using to buy the house. So, and sometimes it's multiple accounts, which is fine. We send all of that. Those are, it's not a huge list. It's pretty, so that's why, when we do the upfront underwriting, we're not asking for an arm and a leg. We're asking for about 5 or 6 different items. Very easy for borrowers to provide all that. We submit it into underwriting, and through the underwriting process, the underwriter is reviewing all that, but they're running things like fraud reports, things that I can't do as a loan officer. I can't, certain systems where that will show, is their name attached to any other properties across the country. A lot of times there might be a piece of land out there that they didn't disclose in the application, or another property, or we might have a Charles Jones Jr. and Sr., which sometimes will cause a question because they have a very similar name, and those names will pop up on these fraud reports. Also, that's when verification of employments are ordered and done. And that's when, again, if somebody's moving from out of state, those questions are asked. Is this person allowed to work in North Carolina remotely? And does that have any impact on their rate of pay if they're changing states? So, and when they're fully approved, they get an approval with some conditions. But really at that point, we need an appraisal done on the property. we might need a couple items like an updated pay stub, or we might need to have evidence that their due diligence check has cleared. But really at that point, most of the work on the loan has been done. So your buyer can focus on the house. They can worry about setting up movers, the inspections, all of that, paint colors, window treatments, all the fun things. They don't have to stress so much and worry about the mortgage side because we're doing that ahead of time.
And it's so important to get that going ahead of time. And one of the things that I want to touch on for the sellers, when you get these offers in, and again, you're seeing all these in front of you, what is the date on that pre-approval letter? When were they pre-approved? Was it way before the rates changed? What could that have affected? And buyers, you too should be really curious about how the rate change has now affected you and your ability to buy.
It's a really great point, because a real crucial factor in qualifying for a mortgage is something called your debt to income ratio. So if you were tight with that number, let's say your debt to income ratio was 48%. Conventional, you can't go higher than 49.9. And let's say you had a pre-approval back in the good old days, just let's say January, February.
The good old days.
Rates were, maybe low 4s, and now they've jumped up to 6. That's going to not only affect your monthly payment, but really it's going to affect your qualifying ability at certain price points. So it's a great time. We're doing a lot of, we're reanalyzing and reissuing a lot of past pre-approvals, running numbers again for clients that we've been working with over the past year. Not everybody's found a house yet. So we call it a refresh of their pre-approval so that we can run current numbers and make sure everything is still going to work at original price points that were discussed, whether it was 2 months ago, 6 months ago, 9 months ago.
Yeah. So once again, sellers, get with your agents. Make sure that they know to look at the dates. If now you know to look at the dates on those pre-approval letters, have your listing agent speak with the buyer's agent, speak with the lender directly, give them a call. I mean, that's part of their job, is to protect you as the buyer, to make sure that you're going to be covered in all situations. And then buyers, please I know nobody wants to get bad news, right? It may not even be bad news, but it is your job to find out, hey, does this still work for me? I mean, it is so important that before you go out and looking at something, that you understand where you fall in all of this, because everybody's so afraid. But the truth is, right? I mean, we're normalizing what we saw before. Those were COVID prices on houses. Those were COVID rates. COVID caused all kinds of things to happen. And I laugh when people back then were like, I'm not going to buy today, Nina, because I'm going to wait for the prices of houses to go down. Nina, I'm not going to buy today. The market is sure to crash. All of these things that I was hearing. And now I'm hearing regret. So now the people who needed to buy a house, they extended their rent. They said, okay, we'll extend 6 more months. And they paid an exorbitant amount of money each month to just, extend 6 months. They're regretting this.
Yes. And to speak on that a little bit. So we've got 2 different things happening in the market. Yes, we have rates coming up. So a lot of people's knee-jerk reaction is, well, the real estate market's going to crash because rates are going up. The price of homes is not a direct correlation to interest rates. The price of homes all comes down to supply and demand. That is the main factor that drives a price of any home in any market. Right? It's supply versus demand. One thing to be very aware of that's very different than 2008, because a lot of people are comparing where we are right now with, the correction and the recession that hit around 2008. The difference between now and then that's important to know is the inventory today is at 50% of where it was in 2008. I don't know if you even are aware of that.
Mhm.
So the problem right now is the supply issue has not been corrected. We still have a major shortage of homes. So that is keeping home prices up. I do think the market might be improving a little bit where there might be a little bit less competition in the
Yes.
market. So some people that just this last year has been too much for them to take and they pulled themselves out of the market. You know, a lot of your first time home buyers that gave up, they actually now might have a chance.
Yes.
Rates are higher, but they might actually have a chance to finally get into a home. And instead of 30, 40 offers on one house, maybe it's 4 or 5, which gives them a fighting chance because there's other
Yes.
things we can do. Nina and I do this all the time to give our buyers a leg up against all other competitive bids. We talked about fully underwritten approval, quick closings. Nina is a master of, talking to the listing agent.
Relationships.
Creating an offer that's based on what the sellers are looking for, listening to their needs through conversations with the listing agent. So we have a lot of tools in our bag to make it work and to make you win. It's easier to win right now. But house prices aren't, if you think there's going to be a 50% sale in 4, 5, 6 months, unfortunately, that's probably not going to happen because the inventory is just not there to support that. So
the one thing that I have been getting a lot of questions about over the last week, and I have some listings coming up, and my sellers are questioning, why are houses sitting on the market the last couple of weeks? So we were used to seeing a house go on the market on a Thursday or a Friday, and by Sunday it was under contract, or maybe before then, depending on the seller and their desire to move forward with an offer. Okay, so that again, during COVID times, things were moving at lightning speed and houses were just not even making it to showings, selling and coming soon status. Couldn't even get in to see it. Now, something might sit for 7 days, 11 days. What happened is that this was over the last few weeks, I'd say 3 to 4 weeks. And then some of these sellers are doing price reductions. So I'm noticing a trend, 2 things. Number one, this all happened at the same time that the rates went up. So what did it do? It caused fear,
panic.
Total panic. I mean, that's exactly what it did.
Mm-hmm.
All of these buyers who were out there were like, whoa, 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 whoa. And they just put the brakes on. And therefore, you have houses that are sitting for a few more days than they were before. And it was all panic driven. I was talking with so many agents, and in fact, on the call that I was on today, hearing that, all right, we need to let the dust settle on all of this so that buyers can kind of catch their breath, maybe breathe into a paper bag to relax a little bit and start to say, okay, let me get back with my lender, get back with my agent. Let's figure out a game plan. One person that I have left out of this conversation, and it could work out for some people, to speak to your financial advisor. I see all of this as a partnership. So if you don't have a financial advisor, your banker, somebody who you can go to that you can say, okay, here's the money that I have to work with. Here's what I have available. Let's partner together and find the best course of action. So one of the reasons that we see the prices going down, so buyers panic, right? And then sellers don't want the house to sit there. Sellers panic. I am going to tell sellers, if your agents are giving you some advice right now, and this has been very controversial, but to not list at the higher price and to maybe list a little bit lower right now so that you get more interest in your house, I'm going to tell you that's probably a good plan, because the mind of a buyer
Right.
is just that if it's sitting and then you lower the price, maybe I can get a better deal on it. So sellers out there who are getting advice from their agents to, hey, let's start a little lower and drum up all the interest, you might want to listen to your agents on this one at the moment. I mean, just you hire your agent as a professional, you hire your mortgage professional to give you the advice. There's a reason that we're coming at it this way.
Yes.
Right
And
now.
it's also not, you can't compare selling your house today to what your neighbor 4 months ago sold your house at. The market shift can change things a little bit. So if your goal is to sell your house now, that's what needs to happen. You do need to heed the advice of the professional you hired, your realtor, because they're running the comps. They know what's happening in the market. They're going to give you the best possible advice. If they're not, you know who to call right here. So it's important, but houses are still moving. But based on what we're saying, if you are a buyer and you're reading between the lines right now, you should be reading there is opportunity. Seize it.
Yeah.
You know, if you haven't done anything, you know, you got a shot now. So, you know, I'd say what's shifting a little bit is we're getting closer to a normal market, which is really what's needed to happen, because it's been a wild ride the last year, almost year and a half. It's been crazy. It's the craziest market I've ever seen.
There's one more thing that I want Kendra to touch on before we wrap this all up, and it does have to do with new construction.
Okay.
The idea, now Kendra dropped the bomb on me about locking rates for resale properties before you actually have secured a home. One thing that Kendra I know has available is the ability to lock rates on new construction. So I'm going to let you talk about that.
Sure. Yeah, that's another hot topic. So, and really hot this year. We've had this program for a really long time, but this is the first year we've been in a rising rate environment where it's a hot button. So when you are looking at new construction, we have the opportunity to do what's called a long-term rate lock for new construction up to 1 year. This is really important because we don't know where rates are going to be a year from now. So typically what happens is we take the rate based on how long you need the lock for. Maybe you don't need a year. Maybe you need a 6-month rate lock. Maybe you need an 8-month rate lock. I do recommend we pad the time a little bit because what's happening the last year or so, builders are having major delays. So we definitely want to build around that and anticipate some delays and build that into the long-term rate lock. But you have the ability to lock your rate for up to a year on new construction. And once you are within 30 days of your close date, you actually have a one-time free float down option. So if we get to next June and surprise, we're in a recession, rates are actually lower than where they were in June 2022, you actually have the opportunity to float down and get the current rate. So it's really a win-win. And again, this is a plan to hedge the risk of not knowing where rates will be 6 months from now, 9 months, 12 months.
So, I mean, that's something that you should be exploring if you're in construction. I have one client out there, you know who you are if you're watching, that thought her house would be done this summer, and we're hoping by December.
Yep. Yeah, and we have one right now that's closing June 30th that we pushed to do the long-term rate lock.
Thank goodness.
And at 4%, that's what they're locked at.
I mean,
so
seriously,
you know, you're never going to find that even in an ARM right now. So we're looking like heroes, but you know, they listened to us, they took our advice, and it's really paid off. So
for sure.
Yep.
So I want to thank you so much,
pleasure.
Kendra, for all of this information. Yep. I want to thank Jeff for being our cameraman and everything. Do you want to look at your Instagram, see if there's anything
yeah. Do we have any questions real quick?
I don't know. Let's see. Hang on. Woo, my camera. Let me see. Are there any questions here? No, I don't have any questions there. Should we check Facebook here? Nope. No.
You
no
also
questions
can
there.
message us through Facebook Messenger.
Yeah.
Any direct questions. My number, if anybody has questions or they need to get a hold of me, cell is 919-608-4726, Kendra McCormick. And do they have your,
mine.
yeah.
Sorry. My cell is 919-323-0880. Oh, I don't have my cell in front of me to give you Jeff and Kayla's. Jeff, what's your cell? 919
200
200
3657.
3657. So please, if you have any questions about any of this, any more clarification that you'd like to find out how to get fully approved, let us know. We will connect everybody that needs to be connected together. And I wish all the sellers and buyers out there peace as you go into this. Breathe and listen. As the more educated you are, the better off you are, and the stronger that you can be going into something. When you panic, you're not thinking clearly, you're not making good decisions. Let's just go into this as educated as we can be for a stronger market. So
I love that. Yep.
yeah.
100% agree.
All right. So thanks everybody
Thank
for joining
you.
us, and thank you.
Yes. Have a good night.
Hey everyone. Have a good night. Thank you. All right.